Hey there, welcome back to Markets Daily. Today we are breaking down the latest buzz, the Federal Reserve rate cuts by 50 basis points, marking its first since 2020. Let's talk about what it means for the markets, your money, and how it impacts your everyday life. Ready to dig in? Let's go. The Fed's big move. On September 18, 2024, the Fed decided to cut rates, with Chair Jerome Powell highlighting cooling inflation and steady economy. What's more cuts are on the way, with two projected for 2024 and further drops in 2025 and 2026. It's a cautious but impactful step towards balancing economic stability. Now you might be wondering, what does this actually mean for me? See, when the Fed cuts rates, it has a ripple effect. In your everyday life, lower rates means cheaper borrowing costs, whether it's a loan for your home, car, or even credit card balances. If you have been thinking about refinancing or taking out a loan, rate cuts are a better time, since you are likely to face lower interest rates. Additionally, with lower interest rates, consumer spending could increase, giving a boost to the economy. But what happens when the Reserve Bank of India, RBI, cuts or raises rates? It's very similar. In India, rate cuts by the RBI can affect everything, from your EMI payments on a home loan to the interest you earn on fixed deposits. When rates are lowered, your loan repayments can get lighter on the pocket. Businesses often benefit too, with easier access to cheaper capital, which may lead to new job opportunities and economic growth. On the flip side, if RBI hikes rates, borrowing becomes expensive and you might see less disposable income since you'll pay higher EMIs on loan interest. For example, during a hike, investments like FDs might look more attractive since the interest returns could go up. But for borrowers, it could mean tightening budgets. So whether it's a rate hike or cut, it directly affects your day-to-day finances, your ability to borrow, and your savings. And what about gold? Historically, rate cuts support rising gold prices. With tensions high globally and growth slowing, gold is already near lifetime highs and we might see it climb higher. But hey, gold's volatility makes predicting this a bit tricky. For the stock market, the rate cut has stirred up volatility. The Nifty index has been battling resistance at the 25,500 mark. If we see sustained momentum, the index could push towards 25,800. If not, consolidation might occur between 25,500 and 25,000. Expect some twists and turns in the coming days. To sum it up, rate cuts, whether by the Fed or the RBI, are designed to keep the economy steady, lower borrowing costs, and could spur market growth. But the impact isn't just on businesses. It hits close to home by changing how much you pay on loans, the returns on your savings, and more. We'll be keeping a close watch as these changes play out both in the US and around the globe. Thank you for tuning in to Markets Daily. Be sure to subscribe and share this episode with your friends. Until next time, stay informed and make smart financial moves. Investments in the securities markets are subject to market risk. Read all related documents carefully before investing. This content is only for educational purposes and it should not be construed as investment advice.